Welcome back. Up now, we're going to take a look at the markets and how they've been doing. We're going to be joined by Catherine Murray, the host of The Buck Stops Here, who's going to give us her take on what she's been watching this week. All right, Catherine, what have you been keeping your eyes on? Take it away, all yours.
Thanks, Seema. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. We are seeing North American equity markets trade lower today, down by about a half a percentage point or so. The price of oil is also trading lower, weighing on the TSX. It's down by about 2%, and the price of gold is up by about 0.4%. Investors are very much focused on the earnings results, and they are somewhat mixed and cautious tones coming out of company managements. So a little bit of a damper on the broader market sentiment. Having said that, the markets really have been quite resilient as of late, despite a big backup in the yields, likely because of a soft landing narrative, which more and more investors are discussing versus hard landing. And that in large part is due to the view that the bank stresses, obviously caused by the Silicon Valley Bank decline, are in the rearview mirror. We did, however, learn from the Beige Book this week that the credit conditions are in fact tightening. So that could weigh on earnings and earnings outlooks, as well as, of course, the economic data. Speaking of which, we did see the Philly Fed manufacturing come in at a 3-year low, and also initial jobless claims moved higher this week. There's also, of course, the continued concern of the Fed. Will they, in fact, pivot and not raise rates at their May meeting? Having said that, we did hear from New York Fed president that inflation still remains high. At the same time, the Chicago Fed president leaned a little bit more on the dovish side and said that they need to be patient as it relates to raising rates. Obviously, we've seen that have an impact on the financial system going back to Silicon Valley Bank. As it relates to earnings, some specific companies to watch, Tesla stock is down by about 9%. Their first quarter earnings results did miss expectations, and the price cuts that they've been implementing weighed on profitability. Gross margin came in at 19.3 versus 20.7 expectations. We're also keeping our eyes on AT&T, negative results there from their earnings results, sending that stock down to the tune of 10%. American Express, that stock is down by 3% following missed earnings results as well. So some of the big picture players certainly indicating that perhaps the economy is weighing on the results. On the positive side, though, I would highlight Las Vegas Sands. The casinos certainly have seen a significant pickup. Their revenue is up by threefold year over year, setting that stock up by 6%. And we're also seeing some nice strong demand within the steel sector. Nucor's results beat expectations, and that stock is up by 7%. As it relates to the TSX, sectors are somewhat mixed. Little change from yesterday. We did have a bit of a mixed picture yesterday. Canadian dollar is lower versus the US dollar. And of course, the federal workers union strike is the top story from a business perspective. And you're also, of course, hearing economists weigh in on what that might do to the economy. Scotia is saying it could hit output by about $200 million per day and about a 1% hit to nominal GDP. There's also, of course, attention on the leaked Pentagon documents, highlighting that Prime Minister Trudeau told NATO that Canada will never be able to meet their 2% defense spending target. We're also, of course, keeping our eyes on the Canadian economic data that has been released, and Canadian housing starts came in at 214,000, well below the consensus and down 11% month over month. And also watching CPI coming in lower in March versus February, 4.3% year over year versus 5.2% in February. So we are seeing a bit of a pullback for sure as it relates to the inflation pain that so many Canadians have been feeling. Away from that, just stepping back, Treasury Secretary Janet Yellen is commenting on the U.S.-China relationships today and noting that they are tense, that the United States is not looking to decouple from China. Nima, I'll leave it there. Back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of The Buck Stops Here. The program airs on Sunday mornings at 9 a.m. Eastern. All right, moving to the latest industry news out of Canada now. Industry Minister François-Philippe Champagne says Canada's electric vehicle battery contract with Volkswagen could be worth more than $13 billion over 10 years. Mr. Champagne disclosed the amount today during an interview with Bloomberg News. It came after the German auto giant announced last month that it would build its first overseas gigafactory in St. Thomas, Ontario. The contract will include an upfront capital investment of $700 million. It also includes up to $13 billion in production subsidies for every battery they make and sell. Don't go anywhere. When we return, we're going to take a look at the news making headlines around the world. From the war in Ukraine to protests in France to declining child vaccination rates in Africa, Forum Daily has you covered on today's news, so be sure to tune into that. And remember, for more news on demand, you could always visit our website, thenewsforum.ca, and follow us on our social media handles.